Have you ever wondered how the uber wealthy people get mortgages on their mansions? Well, in this video, we're gonna look exactly into that. And we're gonna talk about the 6 different ways that these uber rich people can qualify for these luxury mortgages. And you're not gonna wanna miss out on number 6, so stay tuned for the very end for that. But in the meantime, as always, if you're liking what you see, please hit that like and subscribe button so you let other people know that the videos I'm producing are awesome work. So let's dive in. First of all, before we get into the 6 tips of how these uber wealthy people are qualifying for large luxury mortgages, why do they want them in the first place? So let's look at that. A big reason but why wealthy individuals want mortgages, it's for tax purposes. A lot of people have their wealth in their businesses. They have their wealth tied up in their corporations. And how taxes work here is, if you want to buy a residence in your personal name, you're going to need a down payment. And if you're buying a $10 million property, you're going to want to transfer probably maybe $10 million out of your corporation into your personal name. Now, what happens once that $10 million goes to you personally? You're going to have to make tax payments on that $10 million. You're most likely going to be in the 40 to 50% tax bracket. So you're going to have a tax bill of $4 to $5 million as soon as you transfer that $10 million into your personal name. So why would you want to subject yourself to such a huge tax bill? You're going to want to get a mortgage instead so you don't have to pay those gigantic taxes. And another reason why the wealthy want to take a mortgage instead of maybe paying themselves a lot of income and paying taxes, the other way they can do it is they can liquidate some of their investments. What happens when they liquidate their investments? They're going to have to pay some capital gains on that. They're going to lose their compounding on whatever their investments are. If they sell an award-winning stock, then they're going to lose that and they can't rebuy it right away. So there's a lot of different reasons why the wealthy want to get mortgage financing. Having said that, let's jump in to tip number 1, the number 1 program that people are using to qualify for these large mortgages, and that's called a net worth lending program. So some banks will actually lend you a mortgage not based on your income alone, but also based on your assets outside of the real estate. So for example, if you want to qualify for a $5 million mortgage and based on your income, you qualify for a $2 million mortgage, there's a $3 million difference. However, if you can actually show that you have $3 million plus in liquid assets, now liquid assets means assets that are easily sellable, so not RSPs, not other real estate, you can potentially qualify for that $5 million, even if your income only supports $2 million. And the reason behind that, guys, is banks want to know if you ever get stuck and you're going to have an issue making your mortgage payments, you can sell those assets to easily make and afford the mortgage. So that's number 1. Number 2 is an equity lending program. So what that means is if you're putting a large down payment in, if you're putting 50% or more down on a property, a lot of banks will stretch their typical standard debt to income ratios. So instead of using 44% of your income to support the mortgage, payments, any other debts you have, some lenders will go up as high as 70%. So there's a lot more flexibility the larger your down payment. And this is not to be confused with the net worth lending I talked about earlier. Number 3, the third way that some of these uber wealthy people get approved for these large mortgages is through a retained earnings program. People don't want to move the money out of their business into their personal name because of tax liabilities, tax implications. But if the business is showing strong retained earnings, if we're seeing $400,000 or $500,000 of retained earnings every year, meaning this is how much money is left in the business after all of the expenses get paid, all the taxes get paid, some banks will actually look at that and say, okay, well, we can add 40 to 50% of your retained earnings to your personal income. So that's number 3, retained earnings. Number 4, we got is our bank statement program. So this is typically not offered through banks. This is through alternative lenders. So again, you have a business, you have a lot of revenue going through your business, and these alternative lenders don't look at your personal tax returns. They're gonna add up 6 to 12 months worth of revenue that's going through your business and deduct some expenses, and they're gonna use that as your personal income to qualify for a mortgage. So if you've got $1 million a year running through your business, and we're gonna deduct some expenses depending on what type of business it is, but let's call it $500,000 worth of potential expenses, and you write that on an attestation form, we'll actually use $500,000 to qualify you for that mortgage. And this is really helpful for bigger businesses that might not just be running $1 million through, it could be running several $1 million through. And this is an easier way for them to qualify for a much larger mortgage. The fifth program I want to talk about is actually pretty straightforward. It's for the high income earners. And believe it or not, there's some people in our world right now who have huge salaries. Think of CEOs from Fortune 500 companies. Think of lawyers, think of doctors. They have a high income. They can be making well over $1 million a year as their salary. And for these people, qualifying for a mortgage is not that difficult. And the last tip, the best tip, the easiest way for these high net worth people to get approved for their mortgage is to go through private lending. Private lending. You still need a down payment of 35 to 50%, but the criteria for getting these mortgages approved is just that you have that down payment. They do want to know that you're able to make the payments and have capacity, but typically if you've been able to save a down payment of $2, $3, $4, or $5 million, you have the capacity to make these mortgage payments. They want to make sure that the property appraises. The property is very important to them when it comes to private lending, but the process is so much easier. It's so much smoother. The wealthy people recognize this, and they're not going to make much of a fuss over higher interest rates because they know the money they're either pulling out or the investment that they're buying will be well worth it. They will make a lot more money putting this into their business or saving on taxes by getting a private mortgage. So I hope you liked that video, guys. So those were the 6 ways that the uber rich are getting approved for their wealthy $1 million mortgages. If you have any questions, put them in the comments. And of course, hit that like and subscribe button so you don't miss a video in the future.